Tesla stock today was down almost 5% in regular trading. Things really just deteriorated into the final hour or so of the trading day. Here in after hours, you're down another 0.52%. Tesla stock at the time of recording this video is $240 almost exactly per share. Now, we do have some events tomorrow. We do have some economic data and some earnings tomorrow morning that will be important, that could move markets quite large. But what caused a lot of the pain today was Fed Jerome Powell. And I have those headlines for you. It's kind of weird, though. Let me just be honest. Because markets sold off today on these Powell headlines like it was new information. It was relatively the same Powell as we had the last time we heard from Powell. He's not going to be super fast to cut rates. He's not going to be super fast to come to the conclusion that inflation's a big problem. He's just walking down the middle. These are the same headlines that we get almost every day from regional Fed officials. It just seems like when you put that much pressure and spotlight on Powell and he says the status quo, that people take it as like new information. But none of what Powell said today was, call it new information. It was things that we've already heard before. So it shouldn't come to you as a huge surprise. Nonetheless, I will share the headlines because that mixed with retail sales today, it is going to likely continue to affect our markets. Now, retail sales were actually really good. And then again, Powell was seen as kind of bad. But what really caused the weakness today was fake news. I mean, I don't know who circulated this on news wires, but there was news that the U.S. was imposing a 245% tariff on China. That's not true, okay? For some products, they're already at 240%. There's the 125% tariff on China right now, just flat rate. There's an additional 20% for fentanyl. And then for certain products in certain industries, there is between a 7% and 100% tariff. Again, certain products, far and few between. So on the highest end range, you're at 245%. There was a White House piece that was put out today on this that just kind of tricked the algorithms. There was no new additional tariffs today. But that is what caused markets to sell off at least the first 1% or so. And then it was Powell that caused another 1-ish% decline for markets. Now, the bottom line here I will give you, I'm actually bullish on Tesla. I'm not as bullish on the broader markets. I think we need to get some trade deals done. If we start to get some trade deals done, then I think a lot of the fear is probably going to die down. Specifically for Tesla, though, I think you've long hit the point of peak fear, right? I don't see there being more fear in Tesla, right? You would have to see like demand really drying up, the economy getting weaker, for things to get like more fearful in Tesla. You're already down close to 50%. Right now, it's about 50%, a little bit more than that, from all-time highs. A lot of people believe Elon is so focused on politics, he's not even running Tesla. And with that, you have the political ramifications of lower demand. I mean, there's so many things, like even deliveries, like some of those just really out of context, not true headlines that we've gotten over the past couple of weeks, like deliveries down 50% in Europe in January and in February, right? Taking data that is true and really putting it out of context has created a lot of fear in Tesla, and hence why the stock is down 50%. I think you'd really have to see Tesla screw up at this point to get more fear to come into the stock. Now, on the flip side to that, I don't think there's a lot of good news priced into Tesla either, right? I don't think there's a lot of robotaxi positive developments baked into Tesla. Optimus, let's not even speak about that at this point. Nobody gives a rat's ass about what Optimus is doing. The cheaper, lower priced Tesla, seems like nobody cares about that? That's certainly not reflective in Tesla stock today. People are really seeing the downside, the bad news, and that's their bias right now. Whereas you're probably going to get some upside surprises coming next week on earnings. I mean, FSD launched in Mexico, in China, soon to be in Europe. Like Robotaxi is coming here a month and a half from now. The lower priced Tesla should be coming in about a month and a half from now. Just those things alone, I think, are huge, let alone progress on the Semi, let alone the new Megapack factory that is already under construction in the US. Like, none of that is getting any attention right now. And I think the earnings, while kind of like last earnings, they're probably not going to be great. They're probably going to be bad. Tesla's probably going to miss, blah, blah, blah. Seems like Tesla misses a lot. Doesn't even matter. It's about what's happening next quarter and the quarter after that and the quarter after that. Okay? That's what we're going to pay attention to. And I think you're due for positive surprises. And that's going to send Tesla into the 300s coming next week or the week after. So roughly the next 2.5 weeks or so. You could see Tesla make a big move to the upside. That's my view. Now, I kind of feel the same general way about markets. We've all kind of got this negative bias going on, or at least most of Wall Street does, that things are bad, and they are bad. But we just came from, like Trump nuking the economy to maybe there's going to be some deals that are done. We obviously need to see the deals and they actually come through, right? But you've already gotten like really bad news. Kind of like, let me be extreme here. Kind of like going to the dentist and I guess this situation is extreme, so maybe it kind of fits. Maybe it's like you're going to the dentist, right? And you think you're going to have to get all your teeth pulled for whatever reason, your enamel's all messed up, whatever it is. And you go there and they say, you only have one cavity. How ecstatic are you going to be, right? It's kind of hard to go back to, I'm going to lose all my teeth, right? From, oh, you only have one cavity. Next time you go to the dentist, it's not going to be nearly as bad, right? That's kind of where we are now. It's hard to get more fear than we've already seen because Trump nuked global trade. Now, if deals are not done, that's a problem. Now, there is speculation that a deal with Japan, a trade deal with Japan and Europe, specifically the UK, could be coming very soon. Once we start to get deals coming in, that is going to be very positive. Now, and I will tell you, this whole trade war situation ends and markets recover when China comes to the negotiations table. That's going to give you another 10% upside from here at least, okay? You're probably going to see a huge day when China says they will negotiate. Probably easily sends the S&P back to the 580s or so, maybe even close to 6,000 again. Because crisis averted. This happened in 2018 with the first Trump trade war. It basically ended when negotiations started. Okay, so as soon as that headline comes out, trust me, you do not want to be short in markets anymore. And I think that could be just weeks away. We'll obviously have to see how things transpire. China has said that they are willing to negotiate with someone, like not Trump, but someone that is reasonable. So we'll see where that goes. And let me be the first to say, Trump may be crazy, but I don't think he actually wants that kind of economic damage long term as it would be by keeping 145% tariff on China. Like, that's extreme. You're hurting American companies way more than you are helping Main Street. Okay, that's just not a good situation to be in for a long time. Okay, you could do it for a little while, but long term, that is very destructive. And I don't think Trump wants that. It's not the best way to make progress in this regard. Now, again, I just want to reiterate, retail sales today came in better than expected month over month, which is a great sign for the economy and for the consumer, in which we've had these recession fears for a while. You start to get some deals that are done, and people are going to say, oh my gosh, maybe if deals get done, we avoid a recession. Okay, that's going to catch a lot of Wall Street on the wrong side of the trade. Stocks are going to move higher, and problem solved. Now, I'm assuming deals get done. Keep this in mind. Whenever I speak bullishly on markets or on Tesla or literally on any financial asset, I'm speaking in terms of we're going to get deals done. If deals don't get done, and for whatever reason Trump is crazier than we all think, and these tariffs go into effect, you're not going to have a good outlook for markets. You'll have a deep recession. Stocks will fall 50% from here. In your risk, your modeling, if you do modeling as an individual investor, that is on there somewhere. I would say that's maybe a 2 or 3% chance. Okay. There's maybe a 10 to 12% chance that there is deals done, but they're just really destructive deals. They're really bad deals still with tariffs that are too high. There's probably like a 50-ish% chance we get a lot of free trade agreements with maybe agreements for countries to start purchasing, treasuries, right? A certain amount of treasuries to kind of lower our rates, okay? There's a good chance that deals get done. It far outweighs the probability, I think, that tariffs are just going to be implemented. This pause is just a pause, and there's no deals that are going to be done. Keep that in mind. The one that really matters, though, is China. Now, tomorrow morning, you're going to get building permits for March and housing starts for March. This data really doesn't matter too much. It is initial jobless claims that people are going to pay attention to. You're expecting 227,000. Last week was 223,000. So you are expecting about a 4,000 jump from last week. Again, it's kind of like pretty straightforward. If it's low, that's good. If it's high, that's bad. All right. Philadelphia Fed Manufacturing Index will also be coming out. Last month was a strong month, but you're expecting that to come down from 12.5 down to 2. What Wall Street really cares in regards to these regional Fed data points is prices paid. That's the only thing that Wall Street really even cares about ever. And we don't have an estimate here, but last month it was 48.30. So if prices paid comes down, that's great. This time around, though, I think employment and new orders could be more important because, again, with tariffs, it's going to take a little while for that that rise in inflation to be reflective in some of these surveys. Kind of like the CPI report just wasn't a big deal, even though it came in really low. It's because people are saying, okay, last month was low, but what's next month going to look like? What's 3 or 6 months down the road going to look like? And so we're kind of in a weird environment right now. And it's really just headline driven. Like, let's be honest. We're reacting to headlines overnight and moving on them the next day. Or reacting to them in the morning and then, continuing the follow through throughout the trading day. Like that weird headline today about the 245% tariff on China. Everyone reiterated that as if it was new information. It's not. It's already been in place for certain goods and certain products. No tariffs were put into effect today. So you can see how markets are really jumpy. Does China come to the negotiations table? If they do, or when they do, it is the end of this correction or bear market, whatever you want to call it at this point. Okay? If they don't, we have bigger problems, especially if no deals start to, come out. But again, there is rumor that Japan could be soon to sign a trade deal, which I think, again, is just going to boost a little bit of maybe confidence that China will also sign a trade deal. And that would be very positive for Tesla, albeit considering that we don't want the Chinese consumer boycotting Tesla. That is Tesla's biggest market. That would be a big problem. Okay? All things considered, as long as that does not happen, hopefully this problem gets solved quickly. And next earnings, I do think we're set up in a very bullish way. Especially, again, you fell 5% today. I wouldn't be surprised if you rally tomorrow, although that is obviously not a guarantee. And I personally think the chart looks pretty good. Not after today as much. Yesterday, it looked much better. You wanted to get above that 20-day moving average at around $257 or so and hold support at this trend line. You did not. You rejected at the trend line. Now you're kind of in a little bit of no man's land, but you've gotten a lot of demand and there's been heavy volume between 240 and 215. So, as long as the broader markets don't fall apart here, then I think Tesla should hold up pretty well. And well, markets look like they're back testing some of the gap up that we had. That 10.5% day, which you could come back down to the 500-day moving average at about 504. That is where your moving average is. That wouldn't surprise me. Although, again, I think it's hard to scare markets at this point with tariffs as long as the economic data is good. Now, if the economic data starts to fall apart, that's a totally different story. Then you're looking at substantial downside from here. But as long as the economy holds up and there's no more crazy tariffs announced, I see it as difficult for the markets to come down meaningfully from here. But hey, what do I know? Let me know what you think down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day. Oh, we almost forgot TSMC. TSMC reports earnings tomorrow morning. United Health Group, Huntington American Express, Ally, and Fifth Third Bank. American Express can be important because it's all consumer. They're going to tell us a little bit more how consumers are spending money. That is obviously important with this economy. 73% of GDP is people spending money, so it's huge. TSMC is going to tell us a little bit more about maybe what chip demand looks like. If we are seeing some CapEx slowing down there, or if firms are continuing to plow money into buying chips. That's going to tell us a little bit more about NVIDIA, considering NVIDIA fell like 7, 8, 9% today at times. I think TSMC's earnings tomorrow morning are a little bit more important than they otherwise are. Now, Netflix is going to report tomorrow after the bell. I don't think it's as important, though, because they're not as heavily tariffed. It doesn't tell us a whole lot about the economy, although if people are canceling Netflix, that's a big problem. We'll see what they have to say there if markets react. Netflix does tend to move other big tech names, but I don't think this time around it's nearly as important as it usually is. So with that said, let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.